Hello and welcome to the European briefing for May the 8th. So, global stock markets continue to suffer on Tuesday while safe haven assets like the Japanese yen extended their recent gains as investors continue to focus on the possibility of more escalation in trade tensions. There hasn't been any new catalyst behind the latest wave of risk aversion, so it seems that traders are simply limiting their risk exposure ahead of what promises to be a volatile end to the week. Chinese officials will visit the US tomorrow for another round of trade talks, and unless Beijing makes some immediate concessions, the Trump administration will probably impose more tariffs. Since China doesn't typically bend under such pressure, it's looking more and more likely that trade tensions could escalate further. As a result, sentiment could remain fragile for now, keeping risky assets like stocks under pressure and safe havens in high demand. Turning to New Zealand, the nation's central bank cut interest rates overnight. The Kiwi fell quite sharply on the decision, but managed to recover nearly all of its losses to trade practically unchanged against the US dollar. It seems that investors think this was more of a one and done rate cut and not the beginning of a prolonged easing cycle. As for the Kiwi, the risks in the near term still seem tilted to the downside, mainly due to trade uncertainty. Finally, it's the British pound that is the worst performer today. So the latest reports suggest that cross-party talks between the Conservatives and Labour are going nowhere. Meanwhile, Theresa May's position as Prime Minister is under threat, while the new Eurosceptic Brexit Party is leading the polls for the EU Parliament elections. Overall, sentiment towards the pound seems to be changing again, and unless cross-party talks manage to produce something of substance soon, more pain may be in store for the British currency. So that's it from me. Thank you very much for watching and have a great day.